The dollar versus yen has continued its move to the downside, or at least keeping the declines that we saw earlier in the day. In the process, the market is approaching a retracement level and swing level. I'll talk about that and more in this video, so let's get started. Looking at the hourly chart, you can see the decline really over the last few days in this currency pair. Part of the catalyst is the potential of the U.S. government shutdown, which has traders on edge as far as the dollar goes, and maybe a flight into the relative safety of the yen. Also, yields are lower in the U.S. This morning today, so that is also contributing to the bearish dollar move, including the dollar versus yen. Technically speaking, we fell below these two moving averages right here. That was the 200-hour moving average and the 200-day moving average. Both of them converged near the 148, looks like 40-ish type level. Note that we broke above that level last week and found support buyers against it before moving higher. And trading yesterday, we came back down toward that level, found support buyers and moved higher before moving to the downside. What did not happen in trading here today was it moved back above the 61.8% retracement, back above the corrective high from yesterday right here. And that gave the sellers a go-ahead to push to the downside, break below those two 200-bar moving averages right here, and continue also below the 50% midpoint of the move down from this high going back to, I guess that's August 1st, to the low price that we saw in September. That 50% came in at 148.18. Breaking below that level and staying below that level is also give the sellers a go-ahead to push lower. Now, the next key target area I have outlined here in yellow, it is defined by different swing highs right through here. Broke above the, gapped above the swing high right here, fell back below it through here into the moving average support, but then rotated back to the upside. And the next time the price came down to that area, we found support buyers here, here, and here before starting to run to the upside. So this area right here between 147.45 and 147.54 is the next key target area that traders would need to get to and through to increase the bearish buys. What would put an end to this? Well, if support buyers do come in here, we could see buyers come against this level with a stop below that level and then push the price back up through the 50% retracement, and of course back above the 200-bar moving averages. That certainly would give the buys more of a positive look from a technical perspective. But that, with the absent that, the sellers are still more in control, especially if it stays below the 50% retracement of the range since that August 1st high, this level right through here at the 148.18 level. So that's my technical look at the dollar versus yen as we head toward the close of the day, toward the end of the day in the U.S. session, look toward the new session in the Asia Pacific. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.